The United Nations says developing economies are again looking to claim the largest share of international investments. But political uncertainty and economic turbulence in those countries could impact foreign direct investment into emerging markets. Natalie Carney reports.
Emerging economies are experiencing some rough tides. Turkey's financial market, for example, has been hit hard by waves of political and economic uncertainties. Yet while some foreign investors have grown nervous about the challenges facing several large developing economies, some analysts still see opportunity there.
Organisations tend to look to emerging markets to get upside growth, to get greater rates of return, and to get a stronger medium and longer term business strategy in place. So invest or go earlier into emerging markets so they can be there when others follow.
Following the financial crisis of 2008, foreign investors flocked to emerging markets as the developed world's perceived stability crashed. Investors who were skeptical of emerging economies became believers. According to the UN Conference on Trade and Development, foreign direct investment, or FDI, in developed economies rose to $576 billion in 2013, accounting for 39% of the year's total. At the same time, foreign investment in developing economies hit a new high of nearly $760 billion, or 52% of the total.
The redirection of foreign investment towards developing countries and away from developed countries over the last few years has been dramatic. However, some analysts do point out that these abrupt shifts should not be confused with long-term trends.
According to hedge fund manager Kamel Cenk, many investors have traditionally seen emerging markets as hot money.
Some fund manager or foreign investor here to take an advantage for the market structure, they can quickly move to Russia, China, Brasilia. You cannot hold them until you give them what they want, which is interest rate, GDP, and stability in the country.
That may apply to portfolio investors, but not to big businesses such as China's Sunergy, which is building a $600 million solar panel plant in Turkey, or for American firm 3M, which is adding another $500 million to the Turkish economy. These companies are looking to take advantage of this emerging market's long-term advantages, such as its young, dynamic workforce and geographical location.
There is definitely a trend in some places to go back to developed markets, particularly in the European area, in the Eurozone.
While Turkey lags far behind China, which brought in just over $59 billion in FDI last year, the increasing integration of the world's economies all but ensure that investment capital will continue to flow into Turkey and other emerging markets. Natalie Carney for CCTV in Istanbul, Turkey.